Let's discuss this particular topic. What are accounting concepts? What are accounting conventions? See, what are accounting concepts? See, concepts means here these are nothing but the assumptions which we keep it in our mind there when we are maintaining books of accounts. So these are the basic fundamental assumptions which we should keep in our mind there. They are concepts there. So assumptions are these accounting concepts are assumptions or conditions upon which accounting is based. That means our accounting is based upon these particular assumptions or these particular conditions which we keep in our mind. So what are those particular assumptions which we should keep it in our mind there to maintain books of accounts are? The first one, it says business entity concept. See, what is business entity concept? See, business is treated as entirely different from that of the proprietor. In a brief, I have written this particular one. So business entity concept says that every business should be treated as entirely different from that of the proprietor. That means a person who is maintaining books of accounts there, he should think that his business is separate and the owner is the separate. Both are separate entities. When you are recording in the books of the business there, we should think from business point of view and we should record in the books of the accounts there, but we should not think from the point of view of the owner or the proprietor. So this business entity concept entirely says that business is treated as entirely different from that of the proprietor. See, if you won't keep this particular concept in our mind, what happens? We will be mixing up the personal transactions of the proprietor and as well as the business transactions, whereby our business books will not be able to give a correct picture about our business affairs there. So we should keep them separate. The personal transactions of the proprietor should be kept entirely separate from that of the business transactions. So in the business books, we should record it only the business transactions relating to the topic business only. So this business entity concept says that business should be treated as entirely different from that of the proprietor and only business transactions should be recorded in the books of account, keeping in mind the business. Okay. Even if the proprietor also maintaining the books of accounts also, he also should treat that his business is entirely different from him and only business transactions he should record. That's what a business entity concept says. See, because of this particular concept only, you can see the capital which is contributed by the proprietor to the business, it is also treated as a liability. Okay, so capital is a liability from business point of view because business is treated separate and owner is treated as separate. Whatever money the owner has contributed as capital, it is nothing but just like the money borrowed from this particular proprietor by the business. So business is having a separate identity or entity in the eyes of the law. It is an artificial person created in the eyes of the law. So this is about the business entity concept. Coming to the dual aspect concept, see, this dual aspect concept clearly says that in every transaction, if you observe, there will be two aspects. One is the giving aspect, another one is the receiving aspect. Okay, see, dual aspect concept says that in every aspect there are two things there. One is giving aspect and one is the receiving aspect in every transactions. So there will be two aspects of each transaction. One is giving aspect and that is the taking aspect. So based upon this particular one only, our particular double entry bookkeeping is based upon. Okay, in the double entry bookkeeping, both the aspects of the business transactions, the giving aspect and the taking aspect, both are being recorded here in the double entry bookkeeping. So this is the basis of double entry bookkeeping. Dual aspect concept is the basis of double entry bookkeeping. See, based upon this double entry bookkeeping only, this particular accounting equation is being framed there. So accounting equation says this is called as an accounting equation. See, capital plus liabilities is equal to assets. Okay, capital plus liabilities is equal to asset. See, in our books of accounts, the balance sheet will be tallying only because of this particular aspect there. Because two aspects, if we record it in the books of account, one is recorded as debit, another one is recorded as a credit there. So ultimately, the total debit should be equal to that of the total credits. So simply here we can say this dual aspect concept is the base for double entry bookkeeping. So simply dual aspect concept is the two aspects of the in every transaction there will be two aspects. One is the giving aspect and another is the receiving aspect. So both should be recorded here in double entry bookkeeping. Now coming to the third one, going concern concept. What is going concern concept? See, the person who is maintaining the books of accounts, he should keep it in his mind that there is no reason for him to think that his business will be wound up in the near future. His business is having a long period. In other words, it will run for a long period. There is no reason for him that his business to think that his business will be wound up in the near future there. Unless and until the business is being dissolved, till that particular period, the business will go on running like that. So this going concern concept is the basis for all credited transactions which are taking place today. Throughout the world now at present, if you observe, every business is running on a credit there. So this is the basis of that particular credit transaction taking place there. Because every businessman knows that even if he sells the goods on credit there today, whatever credit transaction is involving in, okay, those transactions will be settled in the near future because this business is a going concern which will go on running like that only for unforeseeable future. So there is another concept here, going concern concept. Next comes the cost concept. What is the meaning of cost concept? This concept clearly says that in the books of account, whatever assets we recorded, we should record it at the cost price only. The price which we have paid to acquire those particular assets, at that particular price, we should record the assets there. We should not record the assets in our books there at any other price, just like market price. Okay, such type of prices at those particular prices we should not record it, because these particular prices will go on fluctuating. So cost concept says that every asset whatever is being purchased, it should be recorded at the cost price only. Okay. Then again, money measurement concept. What is money measurement concept? This concept clearly says in accounting books, okay, every other transaction will be measured in terms of money. Okay, whether that particular business it might be dealing with any liquids, gases or solids or whatever it might be, every transaction, every other transaction, it will be measured in terms of money only, and it is recorded in the books only in terms of money only. So this is called as a money measurement concept. Then again, accounting period concept. Accounting period concept means here, normally every businessman, even though he is having this particular concept in his mind, the going concern concept, but he should know at regular intervals how this particular business is performing, whether it is in profits or what is the result of his particular decisions taken, what is the decision, what is the result of his particular operation or his particular policies which he has adopted there to run the business. So in other words, at regular intervals, he should be able to know whether he has made a profit or loss in the business there, how he is dealing with the expenses there, how he is managing the different things in his business, how the assets are there. In other words, what is the financial position of the business, how much liabilities are there. So for that period, for that purpose, what he should do here is, he should take one particular period as some accounting period. At the end of that particular period, he should balance all his particular ledger books and he should ascertain the profit or loss made in the business as well as the what we can say, the financial position. He should ascertain the financial position. So this is called as accounting period. Then in other words, every businessman should assume one particular period as an accounting period. Normally, businessman will take some 12 months period as accounting period, at the end of which he will ascertain. In other words, he will ascertain what is the profit or loss he has made and what is the financial position of the business. He will calculate it. So this is called as the accounting period concept. See, apart from this, there are many other concepts there. So these are the fundamental basic concepts which we should keep it in our mind. Then similarly, conventions if you observe. See, what are the meaning of conventions? Accounting conventions are nothing but these are the customs. Okay, these are the traditions or these are the practices which we follow while maintaining the financial statements. In other words, while preparing financial statements or while maintaining books of accounts, these are the conventions or the customs or the practices which we adopt there. Okay, these will come, in other words, year after year we will be adopting the more or less the same type of policies or practice we will be adopting it to maintain books in a uniformity manner. So they are our conventions. So among these, the first one is says convention of consistency. He says convention of consistency means the accounting methods and the practices whatever we follow, okay, they should remain consistent from one year to the other year. That means year after year, these particular policies or methods which we adopt there to maintain the books of accounts, if they are consistent, at that time we will reap some particular benefits. What type of benefits we will reap? We will be able to compare the performance of one year with that of the other year. Okay, because you know very well, whenever there is some comparability, then we will be knowing the performance of our business in a very effective manner. So in other words, this particular convention of consistency says that accounting methods and practices which we follow from year to year, they should remain consistent, they should remain the same. Okay, they should not be changed frequently. Even if some change has to be made, there should be some strong reason behind that particular change. Okay, just like by changing a particular method there, if you are able to disclose every other thing in a correct manner in the books of accounts, much more factual information you will be able to reveal it in a more detailed manner at that time, or because of some particular changes in the accounting standards or because of some changes in the accounting methods or practice to be followed according to the statutory, etc. At that time, we should change it. If not, we should not change our accounting methods and practices or the policies which we follow from year to year. So, there is convention of consistency. Next, convention of disclosure. Convention of disclosure, it says that our books of accounts should be able to disclose every other information which is needed by the users of the books of accounts. Okay, in other words, here, the people who use the accounting information, they should be able to get every other factual information relating to that of the business from our books of accounts. So that is called as convention of disclosure. Okay, next, convention of materiality. See, convention of materiality, more or less what it says is a part of this particular one only. Convention of materiality means here our accounting book should be able to reveal every other material information. Material information means an information which is significant, okay, for the people who will be making their decisions by going through our books of accounts. In other words, here every other interested party who will be taking their decisions relating to our business by going through our books of accounts, okay, they should be able to get every other that particular important information based upon which they will be able to take their particular decision. So such type of material information should be revealed there. Okay, in other words, here disclosure materiality, just like I will give you one example, just like sundry debtors are there. Okay, sundry debtors means the sum of the debtors. Debtors are the people who owes money to our business. So when this particular information is given by our books of accounts, it should be able to disclose the total details about that particular one. Just like out of those debtors, how much are good debts? Debt means amount due from the debtor is debt. So how much are good debts? How much are bad debts? How much are doubtful debts? How much of them are secured? How much of them are unsecured? So this type of total information relating to one aspect should be disclosed by our books of accounts there, and it should be material in nature also, so that the decision makers will be able to take the right decision. Next again, convention of conservatism. See, what is this convention of conservatism? Convention of conservatism can also be called as, it is called as a policy of playing safe. In other words, here a businessman should play that particular policy of safety. Okay, what is the policy of safety? See, this particular convention of disclosure, clearly it says that businessmen should provide for every other expense there. In other words, here all possible losses and expenses should be provided for, but unearned or unrealized profit should not be provided. Okay, what is this? All possible losses and expenses should be provided for. That means here, if the businessman is aware that in the future he is having one particular expense, okay, or he is expecting some particular loss, or in other words, here he is having some particular ideas of some loss may come in the future. Okay, if he is having an idea, what he should do, he should provide it for. Provide it for means he should make a provision to meet such type of for unforeseen expenses or losses there, or for foreseen expenses he should provide some particular provision. Okay, so that at that particular time when that expense comes, at that time he will be able to meet that expense without much trouble. Similarly, for unrealized profits he should not recognize in the books of accounts. In other words, here for an income which is not received, he should not record it as if he has received it. But for a known expenditure to be met in the future, he should create one provision for that. So this is about this particular convention of conservatism. Okay. Now coming to this particular topic here, let's discuss regarding account there. What is an account? Okay, what are the different types of accounts there? Then again after this we will be discussing about the rules of this particular accounts based upon which journal entries will be writing it. So first let's see what is an account. See, an account is a summary of the relevant transactions at one place relating to a particular head. Okay, so what it says, it is a summary of relevant transactions at one place relating to a particular head. Just take for example, in the books of accounts there, the first book which we maintain is called as a journal, okay, wherein transactions will be recorded by way of an entry. So after this we will be learning how to write an entry. See, after recording the entry in the journal, then we will take that particular transaction and again we will record, taking that journal entry, we will record in the second book, okay, which is called as a ledger. So ledger is a book of secondary entry wherein different accounts relating to the business are maintained in this particular ledger. So it is a bound book containing various accounts relating to that of the business. It is called as the ledger. So in the ledger, we will have different accounts whatever are maintained for the business there. Just like we will have accounts on the expenses, on incomes, on losses, on gains, on assets, on liabilities, on the name of persons. Okay. Okay. On every other aspect, we will be having one separate account in each particular page. So these pages in the ledger are called as a folio. So observe how this particular account will be. What will be there in an account? See, account format is of this particular type. Just like take for example salaries account. If we say salaries account will give us the details about how much our salaries are being paid there. Okay, in other words, here relating to salaries, every other aspects, the debit aspects, the giving aspects, the receiving aspects, whatever are there, those will be recorded here in this particular account. Similarly, if you take machinery account, okay, every other aspect relating to the machinery, okay, whatever debit aspects are there, whatever credit aspects are there relating to machinery, they will be recorded in machinery account. So like that, simply an account is a summary of one particular relevant transaction at one particular place there, okay, in one particular head. What it, just like machinery account will give the details about the machinery aspects. Furniture account will give about the furniture aspects. Like that, for every expense, income, loss, gain, asset, liability, okay, on the name of every other person who is dealing with the business there, we will have separate accounts there in our ledger there. So this is the format of a ledger. So in the ledger, if you observe, it is divided into two parts. Okay, the left side is called as debit side, the right side is called as the, okay, so this right side is called as the credit side, this is the debit side. So here if you observe, both will be of similar type here. Date, okay, first column is the date column, second is the particulars, third is called as JF, journal folio, okay, then again amount. JF means here, JF means journal folio, folio means page number. In other words here, the page number in which that particular transaction is recorded in the journal, that one we are going to write it here. Then this is the debit amount, we are going to write it here. Similarly, date, particulars, JF and amount. This is the credit side. So like this, account will be there. See, after this one, after the learning about this classification of account, then we will be knowing how to write a journal entry, then again how to prepare ledger accounts, we will be learning it in our coming periods there. So let's see the classification of accounts. See, this particular classification of account, we are learning the traditional approach here. So under traditional approach, accounts are classified into three. See, these accounts are normally represented as capital A by C, something like this account. Okay. So these particular accounts are classified into personal and impersonal accounts. See, these impersonal accounts again are classified into real accounts and nominal accounts. So what is the meaning of a personal account? Simply you understand like this. Any account which we are preparing in our books of accounts on the name of natural persons, okay, on the name of natural person, just like Ram account, Sham account, X account, Y account, like that, on the name of some natural persons, or on the name of some artificial persons. See, when we say artificial person, a person who is not having the life there, he is an artificial person, but the law recognizes it as a person, just like a company, a firm, an institution, okay, any artificial judicial person, okay, which is created by a law in the, by a law, okay, they all comes under artificial persons, just like one company, MRF company limited account, or you can say A and B partnership firm account, okay, or we can say Usmania University account, okay, or any particular bank account, okay, all these are artificial persons created. So similarly, representative personal accounts, in other words, some accounts which are representing some group of persons there, they are also personal accounts only. Just like outstanding salary account, if you say, what is the meaning of outstanding salary account here? Salaries are payable to some particular people only. Outstanding salary, when we say, it means that for these persons, the salary which is to be paid is not yet paid. It is still payable. Salary is due but not yet paid, are outstanding salaries. So this type of accounts are called as representative personal accounts. So any accounts prepared on the name of any particular persons, firms, institutions, companies, okay, artificial judicial person, okay, or just like any particular statutory body, just like Usmania University account, okay, similarly any particular bank account, okay, any artificial representative person, all these are called as a personal accounts. See, this particular impersonal accounts again are divided into real accounts and nominal accounts. What are real accounts? Accounts maintained on the real assets of the business. In other words, whatever assets of the business are there, on the name of every asset, whatever account is being prepared, it is called as a real account. Just like machinery account is there, furniture account is there, cash in hand account is there, sundry debtors account is there, bills receivable account is there. Okay, so like this, any particular account which is maintained on the name of any particular asset in the books of account is a real account. Okay, then again, nominal account, if you observe, these nominal accounts are nothing but, see, nominal accounts, he says. Okay, for the namesake, they are accounts there. In other words, here, these are not permanent accounts which are maintained, they are maintained for 1 year. Nominal accounts, just like these accounts relate to the top, the expenses, losses, profits and gains there. In other words, here, any account which is maintained in the books of accounts there, in the ledger there, on the name of any particular expense, okay, on any particular expense, on the name of any particular income, on the name of any particular loss or on any particular gain, they are all treated as nominal accounts. Just like you observe salaries, salaries is an expense. Already I have discussed the terminology. An expense here, if you observe here, an expense means here spending of money, okay, with the intention to get some particular benefit out of such spending is an expense here. So here, any account which is maintained on the name of any particular expense, just like salary account, rent account, okay, purchases account, okay. Similarly, audit fees account. So like this, every other terms whatever we come across while we are doing the problems there, you should get the meaning of that. So if you know it, then you will be able to recognize them as an expense, income, or loss or gain. So any particular account which is maintained on the name of any particular expense, any particular income, just like rent received, okay, rent received, interest received, commission received. So these are all incomes there which are generated while running the business. So any account maintained on these particular incomes there, on the name of incomes, they are also nominal accounts only. Similarly, losses, just like bad debts, okay, debts means amount due from the debtor is a debt. Bad debt means debts which are irrecoverable or called as bad debts. Okay, it is a loss. So any particular accounts on any particular losses there. Loss on sale of machinery also, there is also a loss. So such type of accounts which are being maintained for the losses on the name on losses, they are also nominal accounts only. Similarly, gains also, or any particular profits made on sale of any particular assets, okay, they are also nominal accounts only. So simply here, while doing the problem, you should be able to identify what is an expense, what is an income, what is a liability, what is an asset, okay, what is a loss. Then again, like that, if you are able to identify it, identifying them and doing the accounts is very, very simple. Our subject is a very fruitful subject. These are the rules of debit and credit there. So these are the basic rules there. In other words, these rules you should get it by heart. In other words, every time at the tip of your tongue you should have these rules there. Then writing generalities will become easy to you. See, the rule of real account, personal account is debit. DR stands for debit, CR stands for credit. See, for personal account, the rule is debit the receiver, credit the giver. Debit the receiver, credit the giver. Whereas for real account, the rule is debit what comes in, credit what goes out. That means here, in case of personal account, if that particular person is the receiver, you are going to debit that person's account in your entry. If that person is the giver, then you are going to credit in the entry. Okay. Then again, for real account means accounts relating to the top, all assets are real accounts here. So the rule is debit what comes in. That means if that asset is coming in to our business there, at that time that asset account you are going to debit it. If asset is going out of the business, just like if you are selling the asset is going out, at that time that asset account you are going to credit it. Then again, the rule of nominal account is, nominal account means already have discussed it. Nominal accounts are nothing but accounts relating to the top expenses, incomes, losses, gains, profits, etc. Okay, they are nominal accounts. So the rule here is debit all expenses and losses. If that particular account is an expense account or a loss account, you are going to debit it. If it is an income or a gain, you are going to credit in the entry. So these are the rules of the debit and credit, based upon which we are going to record in journal by way of an entry. Okay, so these rules you should get them by hearted. Now let's recognize some particular accounts there. Just like if we classify the accounts there, okay, classification of accounts if you observe, just like capital account, if you observe which account is capital account, you should be able to identify whether it is personal, real or nominal. Come on, capital account is nothing but an account which represents the proprietor. Okay, because business is treated as entirely different from that of the proprietor. Capital is the money which the proprietor has provided to the business there. Okay, in other words, it is representing the proprietor. As such, it is a personal account. Okay, this is a personal account. Drawings account. Drawings are nothing but money or goods or any particular assets of the business used by the proprietor for his personal use or for his family members. They are drawings. So once again, drawings are representing the money or money's worth withdrawn by the proprietor, who is a person. So once again, drawings account is a personal account only. Then again, buildings. Buildings are nothing but they are the assets of our business there. Assets, since they are assets, they are real accounts. Okay, it is a real account. Purchases account. Purchase means already have told you, purchase, this term of purchase we will use only for purchase of the goods. Goods are those things which the businessman is carrying on his business there. So if goods are purchased, then only purchase account will come. If asset is purchased, purchase account will not come. Okay, purchase account will come only when goods are purchased. So this is a expense which the business will be incurring in the normal course of running the business. As such, since it is an expense, it is a nominal account only. So this is nominal account. Okay, then again sales. Sales are nothing but these are the revenues which we generate when we sell the goods there in the normal course of running business. So it is nothing but the income which we generated. So it is an income account. As such, it is a nominal account only, because all incomes are also nominal accounts only. Then cash account. Cash means it is nothing but the money which we are having in the business there. Cash, it is our asset. Since it is an asset, it is a real account. Okay. Then carriage outwards. Okay, in other words, here these are the expenses incurred while selling the goods there, to carry the goods to the customer's place there, carriage outwards. So it is an expense. Since it is an expense, it is a nominal account. Okay, then interest. If you say interest, it is the interest paid. If you say commission, it is the commission paid. If you say simply rent, it is the rent paid. So it is nothing but interest is a expense which is incurred in the business. So it is a nominal account. Commission, this is also a nominal account because it is a commission paid. Commission received, it is an income. Okay, if it is an expense, it is a nominal account. If it is an income, then also it is a nominal account. So this is a nominal account only. Okay, nominal account. Then again bank. Okay, every bank will have one particular name there. Bank is an institution. So it is an artificial person created. So it is a personal account. Personal account. Then again wages. Wages are nothing but these are the remunerations paid to the casual workers there based upon the amount of the work they does. So it is an expense which is incurred by the business. So since it is an expense, it is a nominal account. Okay. Then again salaries. What are salaries? Salaries are the monies, or we can say remuneration paid to the permanent employees of the concern there, which is paid normally at the end of 1 month, something like that. Okay, at the end of a periodical intervals. So these are an expense incurred by the business. As such, it is also a nominal account. Then bank overdraft. Okay, already have told you, bank overdraft is nothing but here money overdrawn from the bank there based upon some particular understanding between your business and the banker there. So bank overdraft is a liability to you. Okay, bank overdraft is nothing but it is a personal account because you are supposed to pay to the banker there. Okay, bank overdraft. Then again bad debts. Okay, bad debts are nothing but here debts which are irrecoverable are called as bad debts. Debts which are irrecoverable are called as bad debts. So bad debt is a loss to the business. So it is a nominal account. Then again bad debts recovered. Bad debts recovered means a particular debt which has become irrecoverable when you write it off. That means you are unable to recover it, so you have written it off as a bad. Okay, it is called as a written off. After writing it off as bad, once again if you have received that money back, it is called as bad debts recovered. So here we are going to treat it as a gain only. So in other words, here we can say we should treat it as a nominal account here. So it is once again a nominal account. Then again outstanding salary. Okay, outstanding salary is nothing but it is the salary which is due but not paid to some group of persons there. So it is a representative personal account. As such, it is a personal account only. This is a personal account. Okay, outstanding salaries account is a personal account. Then furniture. Furniture is the asset of the business. As such, it is a real account. Sales returns. Observe here sales. Okay, here we have treated it as a nominal because it is an income here. Okay, sales returns means here return of the goods by the customers who have purchased from us. Okay, if they have returned it back due to some reason or the other, it is treated as a sales returns. So here you have treated it as an income. So here you can treat it as the opposite of this. Okay, as an expense. So this is once again a nominal account only. Okay, nominal account. Then similarly purchases returns. It is the opposite of purchases. Since it is a nominal account, this is also a nominal account only. Then again a loan to a partner. Okay, in other words, here you have given a loan to a partner. Partner is a person. So it is a personal account. Personal account. Then again interest received. It is an income to you. So it is a nominal account. Then printing and stationery. It is an expense to your business there. As such, it is a nominal account once again. Nominal. Then again rent paid. So you have paid rent. Okay, it is once again expense to the business. So it is a nominal account only. Rent received. Okay, rent received means here rent you have received it. If you have paid rent, it is an expense. If you have received rent, it is an income. Since it is an income, it is once again a nominal account only. Then again bills receivable. Okay, these are those bills on which you are supposed to receive money. It is your asset. Okay, since it is an asset, it is a real account. Bills receivable account is a real account. Then again bills payable. Okay, bills payable means here these are those bills on which you are supposed to pay the money. Okay, as such it is a liability. Okay, so as such this see bills payable account, which account it is? It is also a okay bills payable account, let's see. Then again loose tools are our assets there. Since loose tools are our assets, it is a real account. Then again interest received in advance. Okay, if you have received in advance, you will be receiving from some particular party. As such, it is a personal account here. So, like this, after this we are going to discuss about how to write a journal entry. So, please do subscribe to my channel. Please be in touch with my channel so that you will be able to have the proper basics there. As the chapters continues, you will be able to know much more in detail about the subject there. So, please do subscribe, share it, and if there are any problems, you can comment to me. Thank you.